The conversation about taxes continues to go on, as it will from now until the dawn of time, it does appear, as the deficit does not seem to be calming down on any level, John.
I know. It's not going to get any better. We keep printing money, keep doing things. That whole big pile of debt. Well, I know. But what they're trying to
That's a later problem.
we'll worry about that later. Don't worry
like
about that today, Morty. That sounds like a tomorrow problem. We'll worry about it later. It's okay. It's okay.
But let's talk about it. Let's first talk about it on a level of what we need to know, current circumstances with the OBBA, the recent OBBA passing, as well as DIY hangups, particularly for retirement space. By the way, this is John Hicks, founder of J. Hagan Capital, financial advisor, retirement planner. I'm Heather Branch, here with John to ask him questions that so many of us have when it comes to building a proper retirement plan, one that includes a proper tax strategy. At J. Hagan Capital, they are here to help you with this planning, with these questions. Find us anytime at retirementsolutionshow.com or click on the links we've got posted in the show notes. All right, so during last year's campaign, we all remember President Trump talking about how he was going to end taxes on Social Security benefits.
That's right. It's going to be part of the OBBA, One Big Beautiful Bill Act, the most beautiful of all time. All the beautiful retirees out there will pay no taxes on their retirement. But is that the case?
Hit the record scratch.
Oh.
Hit the record scratch. So we recently saw the passing of the OBBA, as you affectionately call it, the One Big Beautiful Bill Act. And it did not quite go as far as he said that it would while he was campaigning.
It didn't.
So let's start there and talk about what's in the bill when it comes to Social Security taxes and what we need to know.
So the thing we need to start off and understand is that when Social Security was first created, there was no taxes on Social Security. You actually have to go back. It was believe it or not, it was Ronald Reagan in 1987. He wanted to basically fund Star Wars, and there wasn't enough money. Tip O'Neill at the time was in charge of Congress, and he was like, "Listen, Mr. President, you wanted all these tax cuts. We don't have enough money to do this Star Wars program you're talking about, right?" So
not the movie, like outer space.
Yeah, like Star Wars, like where they could read the date on from space on the dime in the center of a New York City road or street. That was the whole idea. So he called it Star Wars. Back affectionately, they called it Star Wars, where they could actually spy, if you will, on people from space, right? So there was no money. So what Reagan said was, "You're right, and I don't want to raise taxes on everyone, but what if we made a tax on Social Security?" And here's what we would do. We would only tax you if you made so much money. We would only tax you up to 50% of your Social Security earnings. Only 50% of that money would be taxed. Well, here's what happened. They came up with tons of money, and they were able to fund the initiative, which helped bring down the Berlin Wall and everything else. So all of that seemed like it worked. But what happened? 1987 led to another president right down the road, Bill Clinton. And Bill said, "Well, if Reagan was able to do it and make some money off Social Security, I don't know why I can't get my hands in that cookie jar." And he was one of those presidents that liked cookie jars and hands in them. And so he decided, well, if Reagan could do it and pull it off, I bet the Teflon president can do it too. So 10 years later, they went from a up to 50% tax of your Social Security income to 85%. And what happened? That allowed Clinton to balance the budget. He literally was able to, because of that extra income, balance the budget. Now, flash forward to now. If you make a moderate income, married filing jointly, if you make $44,000 a year in retirement, you have to pay taxes on up to 85% of your Social Security until the OBBA. Now, Trump did run on trying to eliminate all taxes from Social Security. It wasn't able to go that far. What we are going to see in the OBBA is that each individual that makes $75,000 or less is going to get a $6,000 essentially credit or deduction against that income, right? So you're actually going to get another $6,000 of a deduction to use against your income. And if you're married filing jointly, up to $150,000, you're going to get up to $12,000. So it does not eliminate taxes on Social Security, but almost what the projection is, 87 or 88% of Americans will no longer be paying taxes on their Social Security income. So that's pretty good, except for one thing. People that are in that threshold, that bottom, or that 88%, typically those are not always the listeners to the show. Typically, the listeners of this show are going to be in that 12% that are absolutely going to pay taxes on their Social Security. So the one thing that I always want to let people know is that preparing your taxes, putting it
Yes.
together and getting your 1099s and your W-2s and filing it on a 1040 form, right? Hopefully I didn't give you angst already for this upcoming tax season, but those are all the vernacular that we use. That is very different than purposefully planning to pay less over time, right? So there are two given things that any of us can do any year. We can try to arrange our affairs in a way that we pay the least amount of taxes that specific year, or we can orchestrate a plan to correctly and legally pay the least amount of taxes for a period of time, or in my firm, for the course of our lifetime. So basically going all the way through retirement. And what we have found is that good savers, people that have saved $750,000 or more, they can often save hundreds of thousands of dollars that they would have left on the table by doing proper tax planning. No, this is different than tax preparation. This is different than filing that tax return every April. This is the stuff that happens after April 15th when we look at, hey, how are things going to line up this year? Should I sell that property? Should I take these capital gains? Should I do some tax harvesting? Should I do some tax gain harvesting? Should I replace these investments in these accounts with other ones? Should I do asset relocation, asset reallocation? How should I pull my income distribution from those nest eggs over time? Because they will affect your Social Security. They will affect all kinds of things. And that, in the end, is where we find we saw the study, 9 out of 10 people do not have a written tax plan. 9 out of 10. 90% of people don't have one, which to me means 9 out of 10 people are not getting the right tax advice so that they can put themselves in a better position. And what did we say? If you're a good saver, we're talking hundreds of thousands of dollars. And if you've saved millions, I've easily seen where those savings can reach into the millions of dollars over the course of your lifetime, which is tremendous when you think about how much effort it took to save it in the front end.
Right. Well, and that's exactly why you have a job, John, because so many people that have worked so hard to earn and save throughout their career, they get to retirement, they've got this precious nest egg. Now they're looking to you to tell us, okay, what do I do? How do I do better with this nest egg as I get into this next phase of life? As you're listening, as you're watching this podcast, if you have questions, visit us at retirementsolutionshow.com to start the conversation with John and his team about how you can implement a tax strategy to your plan. Because, John, for so many of us, we take a DIY approach to our taxes throughout our working years. And I think that that's the idea of what you're talking about, the difference between prepping, which is what we do year to year, thinking about April 15th, versus tax planning, which is what you and your team do, looking out years in advance. So let's talk about why, particularly for retirement, the benefit of seeking out professional help for tax planning now in this next phase of our financial life. Why should we look for professional help in that space?
We'll look at it like this. While we were working, or often while we're working, we're putting money away and we're putting it in hopefully something that grows and doesn't lose all of our money over the course of time, right? We're just plugging it away and plugging it in. Our taxes, especially if we work for a company, are not often very complicated. But when we get to retirement, it is very different. Very rarely do we run into people that have saved well that don't have 3, 4, or 5 different income streams in retirement. It's what we suggest they should have, 3, 4, or 5 income streams. Now think about it. That's really different. Often when we're working, we have 1 income stream. Or maybe if you're a married filing jointly couple, you have 2 income streams. Your employer's W-2 that you get, right? But when we're in retirement, we're potentially going to have Social Security income for both folks, and the way that we file for that is very different. Then we're also potentially going to have pension income. We're going to have investment income, some of it coming from 401ks and IRAs, which is tax deferred. Some of it potentially coming from Roths or taxable accounts. We may have investment income. We may actually have rental income. We may have Airbnbs. We may do Etsy on the side. We may actually form an LLC. Like all of these things, many of us never did when we were working. But now as soon as we're retired, we realize, oh my gosh, even though I don't have as much income coming in, my situation's gotten that much more complicated. I have 7 different income streams. How on earth do I position those where I'm paying the least amount of taxes that I have to, but how do I also be certain that I'm not going to pay way too much more taxes? Or how can I make my money last longer, right? Because many of us are thinking about that concept. Hey, should I just work 1 more year? Or could I potentially retire now? Like, what would make a big difference? And many times it's that lost income from paying too much in taxes can make the difference in retiring a year earlier or having the money last for 2 or 3 or 4 years longer, even if you pull more money out than your guy says you can. And that's the craziest thing. We see it every singular day. We're doing shrewd but very strategic little changes make a tremendous difference. And I'm seriously, guys, I'm talking hundreds of thousands of dollars for the average bear. And for multimillionaires, people that save millions, I'm talking millions of more dollars in savings that you can either utilize for your own healthcare planning down the road, or to make sure that you have a surviving spouse that lives exactly the same way, or check this out, to do your giving while you're living. Know that you have enough money that you don't have to worry about running out. You can start doing more gifting or trust planning or things like that. And you know that you're perfectly content with what you know you're going to have. But to be able to do that, and also, I'm not going to say avoid, strategically remove some of those taxes at those points in time from our situation. That's doable by all of us. And the new bill, which as far as I know, and as far as I feel, we've only got 3.5 years left of the current president. So my feeling is we'll have 3.5 years of this bill. Now, who knows what's going to happen after that point in time. So to me, the getting may be as good as it's going to be from a tax standpoint for the next 3 years. So I really wouldn't wait too much longer, because I just don't have any great feelings that, frankly, that our country is solvent enough to keep this up forever. That's the sad truth.
Our nation's debt and how we're printing money and the things that we're doing, it has a lot of concerns for a lot of folks, particularly for folks thinking about their retirement savings and that money that has not yet been taxed and what that means for future obligations. So if you have questions, John and his team, they are helping clients every single day build tax strategies into their overall plan. They can do the same for you. Let's begin that conversation. Visit us at retirementsolutionshow.com to start that tax strategy planning within your overall retirement plan. We also have links posted in the show notes, so you can just click there, or you can find us anytime. retirementsolutionshow.com.